Welcome back to the channel. My name is Brian Johnson. I'm the CEO here at Nexyz Capital, and today we are going to be looking at a video from Gary Gensler that he did with the interview with CNBC, talking about Bitcoin 1 month later. And so let's go ahead and jump into this video. But first, if you haven't, please like and subscribe to this channel and share this video out so that we can get as much reach as possible and as many people as possible can go ahead and see our videos. So without further ado, we're going to go ahead and start this video.
Joining us right now on the set for the first time to talk about Bitcoin and a lot more is SEC Chair Gary Gensler. Good morning.
Good morning. Good to be with you.
So it's a month later, and I think we're all curious about how you think this is going, not just in terms of what's happened to the price, but in terms of what you think is happening inside this market and whether you think it's quote-unquote working.
Well, look, we focus on investor protection, and of course the issuer is raising money. So this product, we've had similar products in gold and silver.
So I'm not sure if you caught that, but the thing that he said with this this product is it's not a fund like you would typically think of an ETF fund. This is an exchange traded product, and he also said it's built to make money. So which means that when you invest in these funds here, you don't own a stake in it. You can't, make money off of it off the side, but you just have to wait for it to go up to make your money back. And they get to charge you fees for having this this product out here in the market for you to invest in.
ETFs, you call them. They're technically exchange traded products. And we approved a group of about 11 at one time. This was not the first way you could buy or express a risk in Bitcoin. But as we like to say, we're merit neutral. This was not in any way like an approval of Bitcoin. That existed. It's just how to trade it in these exchange traded products.
Now, once again, like he said, this is not an approval of Bitcoin itself. This is just an approval of these this one specific product. So Bitcoin is still not a way of currency where you can go out and buy things with. It's just here in these things here to actually create money for the SEC and for the businesses that actually get to send you out these products.
We've had both a futures-based Ether and Bitcoin ETF, before, and I'm curious sort of how you think that this is going to impact the price of these things, given that, by the way, interestingly, was it Pomp who was just on, Anthony Pompliano was just on earlier this week and was saying that so few Bitcoins are actually moving, and what we should think of that.
In merit neutral, I think it's a little less than neutral, Mr. Chairman. It almost was, we called it grudgingly when you finally got it. From the court case sort of forced him. Is it really just neutral, or wasn't there a little bit of a, we're not sure about this thing, and buyer
Well,
beware?
let me say it this way.
Yeah.
We're merit neutral if somebody's complying with the laws.
Okay.
They're giving full, fair, and truthful disclosures to the American public, who gets to decide on their investments.
But you're so smart. You're at MIT.
Now, this brings up an important thing to know. Do you actually know what you're investing in? If you give these ETFs money, have you gone out and read the actual disclosures that they post online on the SEC's website? And these are all publicly available for you to go out and read. And believe me, some of it's going to be dry reading. All of it's going to be dry reading, period. They're going to be long documents, but you actually need to know what you're investing in, where your money is actually going when you give money to these 11 companies that they approved to sell these Bitcoin spot ETFs. And I'll link down below to what a spot ETF is, because a spot ETF is not actually ownership of the underlying asset itself. It just gives them the right to trade it and to charge a fee for them to trade it.
And people listen to your what you think about Bitcoin, and it is troublesome to me if I look at it and I see all the merits of it, and someone that taught about it and understands it seems to have an opinion that maybe it's, I don't know, pet rockish or something.
I get your words about pet rocks and so forth, but I think we also have an investor education responsibility at the SEC, particularly about those investments that are non-compliant with either the securities laws or commodities laws and so forth. So here we have an asset class, all of these 15, 20,000 crypto tokens, many of which, without prejudging anyone, many of which are actually something called investment contracts or securities, and the platforms upon which you trade, the intermediaries. They're not like in this building, NASDAQ, that has protections and against fraud and manipulation and the like.
Just seeing people lose their shirt on.
So what he mentioned that these tokens that we, and full disclosure, I am not in Bitcoin or any other cryptocurrency. At one point I was, and then I sold out. No regrets there. But like he said, a lot of these tokens are securities that are not regulated. And as we know, they say crypto is a decentralized thing where, you know what I'm saying, there is no, pretty much there's no checks and balances except for the actual ledger itself on how these funds are traded back and forth. So, and you may or may not know, yes, Bitcoin, there is a lot of fraud that goes along inside of Bitcoin itself and how those transactions are made. So just be careful when you're buying and selling these cryptocurrencies, that you know exactly what you're getting yourself into, and also the tax implications behind the buying and selling of these assets.
NASDAQ stocks.
You can lose because there's risk. There's risk in investments, but what we try to do as a society is take some of the fraud and manipulation risk out of the markets by regulation.
Is that the problem, though? It's not necessarily Bitcoin, the underlying asset, but more the froth and the potential for fraudsters to use it that is.
Well, this is a field, Becky, that's been rife with fraud and manipulation. And look at all the bankruptcies. And you've had on this set people talking about those various bankruptcies. And it's not just one entity, it's entity after entity after entity. And then investors are just lining up in the bankruptcy court.
What do you make of, this goes to the underlying piece of this, you've heard Jamie Dimon say that he would close it down, that basically Bitcoin you've seen the comments, right? It's not just that he closed it down, that he would say it's, you know, used by drug dealers and used by folks who are doing all sorts of illicit and terrible things. There's very few things.
Now, the use of the Bitcoin by drug dealers, yes, they also use real dollars and cents as well. So if you are investing in it, I mean, that's not really a deterrent, but it is something to keep a note of.
The trade today that people talk about like that. Now, there are obviously frauds and things that happen, but maybe not like this.
Like the dollar is like 100 times more.
I know that's your perspective, but I'm just I'm curious how you think about that.
That's true, though. This is how much has been money laundered with Bitcoin. This is how much. This is Bitcoin. This is dollar.
Yes, Joe. But look, here's the Jamie Dimon quote. The only true use case for it is for criminals, drug traffickers, money laundering, and tax avoidance. I know, but we have a guest.
That's his opinion.
We have a guest, Joe. What is your opinion? And what is your opinion that we have something trading on the exchange for the public that has this type of use case, at least as described by the president of one of the largest financial institutions in the country?
It's the leading market share in ransomware, and that's publicly known.
Right.
You know, it's the token of choice for ransomware. Joe, if I can say, the US dollar, the euro, the yen, you have the whole society using it as a medium of exchange. We buy our cups of coffee, as I see here. We get paid in dollars or yen or euro. And
now, what he's talking here when he's mentioning the dollar and other currencies in other countries, he's basically talking about an economic structure or as a centralization of money and this is kind of how they keep track of the money itself, versus they see Bitcoin and other cryptocurrencies as the wild, wild west of finance. And there is no way to know where the money is going unless you're going to look at the underlying ledger and tracking that ledger and seeing where the money is moving. But even with that, you still don't know who or what the money is going to.
You have a whole central bank and support for one currency generally per economic region. That we don't have here. So there's a very real economic difference.
Which is part of the attraction, since it's decentralized, and you can't have a profligate central bank.
It's not that decentralized.
Well, I know you're saying because of the ETFs, but really it is.
No, it's not that.
Okay, now also when listening to this interview, so the guy on the right with the red tie, Joe, he is heavily invested into Bitcoin, so he does have a as he said, skin in the game in seeing Bitcoin succeed and possibly becoming a legitimized currency.
Decentralized, because look how finance tends towards centralization since antiquity.
Right.
So what do we have? We have a handful of 3 to 6 core so-called crypto
I understand, but the
exchanges.
asset itself, the way that
That's
the
how the
distributed
accounting
ledger,
ledger.
right?
That's
That's how the ledger and
Now, how many times do you have people on this show that say, I want to invest in something because how the books and records are kept? I mean, Joe, really? It's just an accounting ledger, a clever...
It's a ledger that everyone has and can't be double counted. It's almost immutable. That's why people think it has
So
inherent
you
value.
trust it more than an Oracle database, or you trust it
I
more
trust
than
it more than a lot of
depository trust?
the Bitcoin bulls say they trust it a lot more than the central bank that enables the fiscal authorities to spend money to the tune of $33 trillion.
That's everybody's investment choice, but
And then I think about how many things can be used in a deleterious way.
Now, he's talking about trusting the Bitcoin. Now, keep in mind, there is only a set amount of Bitcoin out there. A lot of people have lost their Bitcoins. You can go back and do your research and see, you know, saying like people are like, oh, my Bitcoin was stored on a hard drive and I forgot my password, or I don't know where this drive is anymore, or it's sitting somewhere in a landfill and nobody's going to help me find it and we'll never see it again. So there are a lot of Bitcoins that have been lost. So, and also, you know, it's only worth what somebody is going to pay for it at the end of the day. So just like I said, when investing with Bitcoin, like I said, know what you're investing in.
Of course, but that has nothing to do with the underlying thing that you're using itself. I mean, I can go run a car into a parade and run over 40 people. That doesn't mean we shouldn't have cars, does it?
No, you should have cars.
I wasn't going to use guns because, God, I don't want to trigger, so to speak, anyone on the set. But
when the use case of a particular thing that you're buying and selling as an investment is just speculative investment.
How many of the 90% of the people that own Bitcoin?
So when you hear someone in the government, or in this case the SEC, mention that it's speculative and people actually want to be able to trade in this thing here, that means that you're never going to see this thing pop up on anybody's exchange, whether it's NASDAQ, the Dow, the S&P 500, anytime soon, period.
Are using it for ransomware. There must be another use case that makes it so attractive to so many people.
Speculative investing.
Right. Speculative investing. That's what. Okay. Let me ask a separate question, which is just to pivot this, because I think the next sort of order event question is what happens to Ethereum. For those in the crypto world, they all want to know how you're thinking about that. And really, if Ethereum is a security, how does that analysis differ from how you would think about Bitcoin?
What we did in January was cabin to one set of filings. We have other filings, you're absolutely right, in front of us, but I'm not going to prejudge it for you or the audience. That's something that a 5-member commission discusses and reviews.
So this commission is pretty much set up to figure out how they can actually collect the fees associated with these ETFs, which is why it took so long for them to actually approve them in the first place. Why? One, how do we get paid? Because Bitcoin is not regulated. Two, if we approve you, okay, you're going to charge a certain percentage, and then you're going to pay us the fees associated with having this spot ETF. So remember, the spot ETF, the company that is investing, that you're putting your money into, they don't actually own Bitcoin at all. So when you look at your iShares, which is your BlackRocks and your ARK ETFs, they don't actually own these Bitcoin themselves. So you can go look it up, do your research on spot ETFs, but they don't own the Bitcoin that you're giving the money to them for. If you want to buy Bitcoin, you can go to a Coinbase and you can buy Bitcoin right from there, because they'll actually custody the Bitcoin that you actually own, and that's your Bitcoin itself, versus buying an ETF in the Bitcoin and nobody actually owns the Bitcoin itself.
Good question, which has to do with indexing. So much of our market is focused on indexes. And you focus historically, or at least the SEC's historically focused on individual securities, right? Individual companies and the like. I'm curious whether you think that the system as it is today actually is working in the right way, meaning a lot of the valuations today you could ascribe to the fact that certain securities are in certain indexes. It relates to what's happening to Bitcoin, by the way.
So it's a great innovation going back decades ago. Jack Bogle, and
right.
As you know, you probably interviewed him when he was still alive.
Mm-hmm.
Invented this idea that you could democratize finance, that rather than buying individual stocks, you can buy the basket. Why buy the needle when you can buy the haystack, he would say. And so it was very cost efficient, and it's a way the American public can really participate in the stock market at very low cost. It's also led to some concentration, some centralization in finance, because when you look at the large index providers, if you're in the index or not in the index, it can be very consequential.
And these days it's a handful, but the other piece of it is, these days it's a handful of stocks, which often represent a majority of the entire index.
The reason you're looking
to individual value.
The reason you're looking for the needle in the haystack is to find the needle. Get rid of all the hay. I mean, who wants the haystack? That makes no sense.
Well, but actually, economists, Joe, I mean, you know this, have studied it.
But I thought about it. It's like
no, but they've studied it, that you get the benefit of diversity.
And Vanguard does not.
500 guesses.
Vanguard doesn't have a Bitcoin.
So the needle in the haystack. So if you invest in, let's say, a Vanguard ETF, you can go in there and you can see all the different companies that they invest in, and they quote unquote diversify this portfolio of stocks, so that way if one is down and the one may be up, so that way you can control your losses and gains in these ETFs, versus this Bitcoin ETF where the only thing that it invests in is Bitcoin, nothing else, just Bitcoin. So if Bitcoin falls, you can lose your money that you invested into this account. If Bitcoin goes up, you can make money in this account. But the thing to remember is whether the ETF itself goes up or down in these Bitcoin ETFs, the companies that you invest in will always make money off these fees and off of your money. So you could be losing money. At the same time, these companies are still making money regardless of which direction Bitcoin goes.
Right, they didn't.
Vanguard is not doing it yet. They're the only ones, really, the only of the biggies that didn't do it, correct?
Yeah, I don't think Vanguard actually.
Well, they did not submit an application.
Right.
Do you expect, if we're all sitting here at this table together a year from now, that this dozen or so approved ETFs, that there's only like 2 or 3, gets even more concentrated, or do you think that there's going to be, dozens of these things?
That's really up to the market to decide, but what what you saw when this happened is fees came down dramatically. There was a bit of a investors benefited
Right.
because there was a bit of a competition there. Investors also benefited from better disclosure because they have to do things called registering with the Securities and Exchange Commission on those products. And investors got the benefit of any surveillance by the various stock exchanges. But again, these are highly speculative, risky assets in which to invest.
So keep in mind, as you can see here, these here are just 4 of the companies that have created these ETFs for Bitcoin. Like I said, and there's 7 more. You can go ahead and do your research on them. But at the end of the day, investing in these here is still speculative, meaning that if they wanted to, they can decide to do a rug pull and get rid of these ETFs. And it only takes, just a quick second for them to do that, and make that decision within the SEC to just say we're not going to do any more of these ETFs. But at the same time, they're also letting the market decide if they want to bring out more of these ETFs. So like Ethereum is one that they could do. But I mean, there's, like I said, there's thousands of cryptocurrencies but that's going to be up to you guys to decide to do if you guys want to fight to have more of these ETFs brought to the market. But my name is Brian Johnson. I want to thank you guys for watching this video. If you could, like, subscribe, and comment below, and I'll see you guys in the next video.